I also want to talk to another audience of people that you should consider DAF. Number one priority are people that have set budgets that say, you know what, I'm going to give every year 50, 25 grand, whatever it is, so administratively it helps. Because you get that big write-off that 1 year, it's also very helpful for people that may have a large capital gain, either through a sale of a business or a sale of a property, right? So in other words, like if someone says like, oh my goodness, this year I won the lottery. Oh my gosh, all this money is coming due this year. I'm going to have this massive tax bill. That's also something to consider when it comes to DAFs, correct?
Totally. So we talk about the administrative profile of the people that use these accounts, but that's really the second is the one that's going through the massive life event. So many people use donor advised funds almost like a 401k these days, right? Because your tax benefits are so much better when your income is higher, right? So what folks will do is they'll say, listen, I'm nearing retirement, right? My last 5, 6 high income earning years, what I'll do is I'll basically prepay my giving for my entire retirement, even maybe into the next generation during those high income years into the DAF. Right? So what you can do is you can contribute, whatever the number is, it's 100% deductible. And what those folks can do now is now you're going to take off income from the 37% bracket rather than when you're in the 22% bracket when you're retired, just getting your 401k income. Way better to do it when you're in a higher income tax bracket, right? The tax benefits are better. You're taking that money off your income that you give. So a lot of people will use this as an opportunity to say, hey, I sold my company this year. I exercised stock options. I've sold some real estate. This is a huge tax bill for me, and we'll talk about the right asset to do it with, but that's a great way to offset income in a year while basically prepaying your charitable giving for maybe 10 or 15 years, all the while you're getting that tax deduction right then and there.
I love how you put that. So you sold your business and suddenly you're about to get a $10 million one year, right? Now you're spiking your income that particular year, or you just have a high income earner, like and you're up there and you just say, okay, well, how do I sort of maximize my tax deductions now? You then fund the DAF with sort of like 10 to 15 years worth of future charitable distributions, all in that 1 year.
Because you're going to use the DAF like a charitable wallet, right? So maybe your charitable giving never changes at all, but you're just using the DAF as the way to send the money out to the charities. So you're taking the tax deduction now when your income can justify a huge write-off, but you don't actually have to give the money to your favorite charities until whenever you're ready to do it. And keep in mind the assets inside the account are growing tax-free. So that 10 or 15 year plan could easily stretch to be 20, 25 years through investment growth.
I'm glad you explained that because that's really what I wanted to, hammer that point home was the fact that, because I was explaining, earlier about, okay, I could either give directly to the charities or I could make it a much more administratively easy and much easier to manage by just putting a DAF and then having the DAF cut the check. But the DAF doesn't have to be emptied. That can be in perpetuity.
Totally.
So it could be for 5 years, 10 years, 15, and you can choose different charities each year. And as you were saying, that money is invested, right? So that's really what I want to, convey to the clients, and to our audience. When it goes into the DAF, it's almost like your own private foundation.
Very similar.